All right. Probably need to do a quick little test, but welcome everyone or anyone that may be catching this live. I guess this is what I'm doing. So I'm just gonna update my 19 trading method. I've been video journaling it for quite some time. Talk about it in a lot of Twitter Spaces and other places. So decided I'd update it so people can kind of keep up with the information and the data. And if I get some people who decide they want to join the live, you're welcome to ask me any questions about my trading method, about XRP, or about Flare, and we'll just kind of go from there. So let's see here, just a moment. Let me see if I can do a check, make sure this thing is working. Oh, here we go, arrow up. So it looks like it's working. I'm gonna try to hook up my Bluetooth too so I can hear you. So just 1 second. Bluetooth. Maybe I just have to go with the regular. So, is it grow up? Can you hear me? You got to probably unmute your mic.
Can you hear me?
Yeah, I can hear you good.
Yeah.
I'm trying to switch to my headphones, so bear with me. Yeah, it's working too. So we should be good, man. If you have any questions, go ahead. I'm gonna go through some data on my trading method, as well as answer any questions about XRP or Flare. So if you have anything, man, welcome. Thank you for stopping in.
No problem. Yeah. Well, no, I don't have any questions. I'm just doing my marks here at work here. Thought I'd put you in the background.
No, that's real cool. So you probably can see. Are you watching the chart or you just listening?
No, I got you on the screen.
Cool then. So that's the first thing I'm going to cover here right quick is some data in regards to my trading method. So people who know me know that I have a kind of unique trading method that I trade off of this 19 exponential moving average. So in the picture that you can see, the 19 is this bold kind of yellow line. Um, the blue is the 9, the white is the 3, and they have some significance that I can cover. But the most important thing is going to be this yellow 19. So essentially, what it is a trend trading technique where I use the 19 exponential moving average to identify the trend, and then I just go with the trend. So instead of fighting against the trend, I ride with the trend, whichever direction it may be going in. Right now I'm on a monthly chart. I typically chart on weekly charts. So let me see if I can change this over right quick. It gets stuck. Let's see. There we go.
I have been keeping my eye on the wallet counts and everything on XRP, and
Ye-
it's been very consistent for the last 2 months. Like 20 between 2,000 and 2,500 get added every day. Like extremely consistent.
Well, that's good news because one of the things that I mention a lot in some of the spaces is a lot of times we focus on what banks may be using a particular asset or, you know, payment service providers and all of this other different kind of metrics that we look at. But ultimately, one that gets left out pretty often is just the size of the community,
Yeah.
right? So the more wallets, the more demand, the more liquidity. So that's a very significant metric that I'm glad you're keeping up with because for me it is very important.
Yeah, who knows what it means, but yeah, it's just oddly consistent. That's what, like, if not, like, if Ripple's making accounts for I don't know, banks, who knows, but it seems like it's not just like the community, because it is like within 100 almost every day. Like that's pretty. It's
Right.
weird.
So I'm going to just kind of go back to some back data and then I'm going to catch up to real time where we're at. I'm using Bitcoin as an example first, and I will cycle through some other assets. And you'll see some similarity with these assets that I think is kind of fascinating as well. But we'll just kind of go through the data. So as I've already articulated, this method is centered around trading off the 19. So if I go back in time some, we can see some of the recent passes or not so recent passes of the 19. And like here, if I were to go back February 20th, we can see a clear breakdown where price went under the 19 and it dropped all the way down to as low as $3,000 after that break, right? And then we see here where price broke above the 19 and we had this bullish trend that never broke down under the 19 again until it essentially reached this new all-time high, right? So just getting in on this mark here, right, would have accurately identified this trend that you could have rode all the way to the top. Now, the important thing also is that the trend reflects the downtrend. So as we see a lot of these red candles in test of the 9 as it was on its way to the 19 and some breaks of the 9, we never had a trend turn, right? Because it was one trend direction, and that was from this break to all-time high, there's one trend, and that's up, right? We get a downtrend here, and it's perfectly identified by the break of the 19 here. So we broke down from the 19 here, and we got our lows to about 20 some odd $1,000. So this trend was accurately identified here on the break of the 19. The trend turns back bullish here because we have a break back above the 19, and we go to a new all-time high. So this 19 is most definitely accurately defining these trends, right? So we come here, we did have what could be called a very short trend, or if you want to call it a fake out or whatever, because we see it breached here, but quickly return the following week, right? But this rarely happens, and you don't lose in these events because your exit is essentially here and your entry is in the same price. So this is essentially a net trade if you're using the 19 methods strictly. So this didn't cost you anything, but it did protect you from a loss. More importantly, after you got your new all-time high, we got our next trend turn that was here at $52,000. We would have taken our exit at some proportion of our portfolio, and we've accurately identified this trend again. So we go from 52 to down to about 31,000, and then we get this attempt at a recovery. So we ended up going back in here, you know, or looking for a rejection, and I'll explain that later. But if you bought here, of course, you're not buying here, right? So if you bought here and took advantage of this downtrend, what you were doing here when it recovers is you were looking for a rejection. So because it didn't reject, you rode it all the way through the trend turn. But when it got here and actually broke down, you had to take your position back on the outside. So now you go ahead.
When you so like when let's say you were trading that, when you were looking at the charts and I know the weekly is obviously, like, you know, the trend is for sure going down if it crosses the weekly, but for you personally, like, are you watching the 4 hour, the 1 hour and then making your trade, or are you waiting for the daily or weekly? Because that's obviously a better indicator. Like,
great question. So I definitely tell people who are not as familiar with this method to stay on the weekly. I do personally sometimes go to the daily because my entry will be a little earlier or my exit will be a little earlier. But I have to do that in mind, knowing that if I'm on a daily move, right, that volatility can change within the day, right? And so it kind of changes how you have to watch and set your limits and stops. So sometimes on a daily, but I try to stay mostly on the weekly. So that was a great question, and I'll show you the difference here shortly. But yeah, we can see the clear breakdown here, right? When it lost to 19, and then this brought us all the way down to these low ranges, 16, 15,000, whatever it was, right? So the method is really designed for you to grow your bag when these downtrends happen. Like, these uptrends are great because they give you more, you know, price appreciation. But at the end of the day, these are what I'm actually targeting, because on these moves, if I put my ruler here, right, I'm breaking down about here and I'm getting action at buying in these ranges. So it's a 30% pickup from what I'm taking off the table when I see the downtrend turn. So here's an opportunity to 30% increase your holdings, right? We come over to the next downtrend and we see a breakdown here. And then you start getting a buy range of about here, which was another 30% opportunity to increase your bags, right? And then we go to the next breakdown, and which was this red candle, and we start to get an opportunity to buy in this range, which was a 60% pickup. So you had two 30% and a 60% opportunity to increase your bag size without additional capital. And that is significant. So it's kind of the basis of one of the things that this method benefits me, right? The way that I use it. So again, as I said, I'm also identifying the trend. So if we look in current time, right, we see that last week we finally, after all this time from the breakdown, because we never broke back above it here, right? It was just one clear breakdown. Well, now after all this time, we finally broke above the 19. So the trend is back into an uptrend, right? So we should have all of our bags back on the table, nothing on the sideline, nothing in tether, right? When that price broke about 19.3. And we're going to continue to stay in this long position up until, if for any reason it breaks below this 19 at about 19,000. So at 19,000, we'll be taking a position of taking some portion off the table. And if it happens to go to whatever it goes to, you know, in a breakdown situation, then we'll just be increasing the bag size. But as of right now, you should have all your money into this asset if you have it allocated that way, because you're back into a bullish trend, and we'll just follow where it goes. Now, these other EMAs are great at identifying the actual resistance. So after we got in this bullish trend, we can clearly see we have a resistance here, and we have a resistance here. And I have some other EMAs that can identify some of the other ones, but I didn't want to complicate it, so I just got these few up here. Also very important, I want to just kind of show you the support real quick. So if I pull up those other EMAs, right, and go to a monthly chart, we can clearly see where our supports have been this entire move. So in this area where we had our breakdown, we caught support on this EMA here, and we maintained it all the way up until the FTX debacle, which pushed us down to our next support. And then we got some recovery, and we've broken past two resistances, currently working on this resistance that we're at the current time. So it accurately identifies your resistances, and it actually identifies your supports. So if some reason we would have broken this support here at this blue line, we can clearly see that our next target down would have been this 11,000 range here, give or take, you know, to this range, about 11,000. So we would have known to take some off the table if it breaks this blue line at 15 and be looking to buy back at 10. So everything is identified without having to have all these subjective trend lines and subjective Fibonacci's. Like, all of your resistances and supports are accurately identified here, and your trend, more importantly, is accurately identified here. And this will work with literally any asset, and actually on any time frame. Although, as I mentioned, I only trade on the daily or the weekly.
Yeah. Have you looked into or done any investigating into like developing a bot for this? Like, I don't know the costs. Like, it's way above my.
Because I'm not that technical in nature, I have definitely had people mention it to me, and I've thought about it. But I'm not a coder, a developer in a way that I would be able to do it myself. Yeah. But yeah, it would definitely be an interesting proposition. To be able to kind of do it where you can kind of automate it instead of having to manually make the trades. So that would be awesome for me.
Yeah, after XRP moons, we'll hire somebody.
Okay, sounds good. So check it out. I want to show you what I find kind of amazing about it, because we've seen this evidence here as it relates to Bitcoin. But if I drop down to Ethereum, right, and that's what I was going to say about similarities in this crypto market. Like, Ethereum is in the same situation, right? It broke down here. We went on our big downtrend. We finally got our recovery, and it's literally testing the same EMA as Bitcoin is. So these two assets are in the exact same condition right now. And I always find that fascinating that they have these similarities, because you have your top tier coins that'll have this set up, and then you'll have like your second tier coins, and you'll see here how they all have the same setup as well, right? So we see where Ethereum is. You know, you should be on the long side if you're holding Ethereum or you're Ethereum holder, because the trend is turned back to the bullish trend. If we go to XRP, right, my favorite asset, right, we see where the clear breakdown was back here. We did have a brief recovery. We lost that recovery with the FTX bullshit, and right now we're literally fighting the as you can see here, we're literally fighting the 19 in this weekly price action, but we're to the upside. So
Yeah.
we're positively bullish, back in the bullish range. And we're going to hold that unless for some reason it loses it. And it's been a little battle the last couple of days, but we're positively going back in the bullish trend. So XRP is doing pretty good here.
Yeah, I've been noticing that it's basically being, well, who knows, manipulated, but basically we've been sitting at the same price for weeks. It keeps getting slammed down before the 40-cent range.
Yeah. Well, my thesis is, because I've kind of been watching this for a while. When we got here, this was actually XRP's moment, right? Because Bitcoin was still down, the market was still down, and XRP was going against the market at this, and we actually turned back bullish. So we had 1, 2, 3, 4, 5, 6, about 7 weeks of this bullish action, right? That was ahead of the entire market. The problem is FTX situation happened here, and it literally drug the entire market down. And so we broke trend, and we're just now recovering back from this debacle that happened during the FTX thing. So now we're back recovering from that, but importantly, we're back bullish. So we're going to look at a couple more assets here. But if we look at, say, Cardano, and we see it's almost the exact same setup as XRP. It hasn't quite broken its 19. As a matter of fact, it's kind of rejecting off of it. So this one hasn't gone bullish yet. It's actually got a little rejection, but could soon turn bullish if it breaks here. And that's where you're at with ADA. If we look at Solana, Solana is kind of same situation as ADA, rejected off the 19, so it hasn't confirmed going bullish yet, but is in a very tight range where it could easily break above and turn bullish. We look at BNB. BNB is actually on the bullish side, and it's tapping against some of these higher EMAs to get into this area, which I kind of call the clear skies area, right? Because you don't have resistance above that. So if you can get this price action above here for BNB, then you got good low resistance frames in between here where you could get some nice upward movement. And the way I would check where the next resistance is in a situation like that on the weekly is I would go to the monthly and see if there's any resistances. So we see even on the monthly, once we break this range, there's nothing to prevent the price from skyrocketing up because there's no resistances above this area, even on the monthly. So BNB is kind of set up for a nice move up as soon as it gets past this like 314 range, and that would be something to look out for. I know a lot of people like XDC. I'll take a look at that and then go back to the weekly though. So XDC is right there tapping against its 19. So it's trying to go bullish along with some of the rest of the altcoin market, literally testing it like the other assets are literally doing. So you see what I mean by these similarity in top tier ones and tier twos. Bitcoin, Ethereum, and BNB are tier ones. They're already above it, testing these EMAs. And all these tier twos are literally fighting their EMA right now. So we see the same thing set up here for Algorand. It's literally fighting its 19, trying to go bullish, but not yet. If we look at H-bar has broken into the bullish trend. So all your allocations should be on the long side for H-bar because it is broken out.
When the candle crosses the 19, like even if it just like, do you take into consideration when the candle's like, for instance, like the one you're looking at now, like the candle's all the way through the 19 on there, right? And I would lines, but if it's just touching, does that make a difference to you? If it's
so I'm gonna zoom in so we can kind of answer that, right? So in this situation, if I were trading H-bar, right, I would have had a limit order set probably at 0559, And as soon as it hit that trigger order, you know, from being down here somewhere, it would have dumped me in, and then I would have just stayed in. But
Yeah.
whenever my trigger orders do get, I mean, whenever my limit orders do get, or trigger orders do get hit, right? The important thing is I have to immediately then set my next order in case price for some reason starts to retrace downward. So
Yeah.
I would have got thrown in based on the preset order, and then I would have came back and set another order at essentially like 05, you know,
Same
54,
price.
right, and start over. Exactly.
Okay. But it doesn't make a difference, like the strength, if it's like if the candle is all the way through. You know how sometimes it can just barely touch. You're just
I'm trying to identify the actual breaking moment. So I think XRP is the one that probably shows this best. If I go back over there, where it's kind of gotten above it now, but let me see if I can zoom in a little bit more. But yeah, I'm gonna do this, and this may help out. I'm gonna take the actual candle out. So I'm looking for that right there as a confirmed break, 39191. Because if it's in this area, to me, it hasn't broken the 19. If you can kind of see the difference as I'm zooming in,
Yep.
like if it's on the up and it gets in this range, it hasn't confirmed a break above. Like I would literally need it to be my limit order to be in this range to say, okay, I'm in 39179.
Okay.
Because here is where you typically get your rejections on the bottom sides of these 19. So you don't want to misidentify a trend because it comes up here and touches the bottom of the line, because that's where you're traditionally going to get your rejections. And you'd have got thrown in and price start going right back down. It's like you made a wrong call. Yeah, so you're looking for the upside of it to confirm it.
And you're typically using the weekly for this.
Absolutely.
Yeah. Okay.
Yeah, and here I'll quickly kind of show the difference as far as weekly and other charts, right? As it's a great question. So here's the weekly, and we see that our end would have been, as I stated, 3915 or so. If I go over to the daily, and let's take a look at that. If I go over to the daily, we see that our actual break of the 19, if we were using the daily chart, was literally here. So it was at 3.5 instead of 3.9, right? So you got an early entry here on the daily. So you can catch this early entry, right, by going down to this lower time frame. I just don't suggest people go any lower because, again, it gets you in a situation where you certainly have to make more trades. And I'm trying to make as least amount of trades as possible, and make it as easy for people as possible. So like here on the 4 hour, right, we go and we see, look, it broke here, it broke. You see how many trades you have to do if you're starting to try to do this on a 4 hour. So this is when you need a bot or something, right? Because manually trying to make all these trades is unreasonable.
And how do these? I don't know anything about bots or anything, but how would they? Is that built into the program that would log into your trading platform that would just do all the trades for you, or you'd have to?
Yeah, so basically it's monitoring the API that's giving the price signals and able to place orders and sales and buys. So you're kind of just manually going into the APIs and saying, okay, I'm looking to buy here, I'm looking to sell here, right? And you're just setting it so that the bot triggers it based on the information it's getting from the API.
Yeah, and would that be trading off of like the? I have no idea, but like it wouldn't be logging into, for instance, like CoinSquare. If I use that in Canada, it would be off the DEX maybe or something.
No, you could actually do it like off of Binance or any of these exchanges have open APIs.
Oh, okay. That makes sense.
Yeah. So yeah, that's why I don't suggest these 4 hours. As you can see, it can give you a lot of noise. So it does still accurately identify the trend, because when it broke here, right, it went bullish. And as it kind of hovered around here with this fight, it was what I call noise. But we do still see the trend turn here when it eventually lost this 19. And the reason I'm saying lost, even though we see these wicks down, is because these other EMAs kind of do tell a story, right? So, and that's why I have these 3s and 9s and other numbers up. Because as it was making this noise here and we see price go down, right? You can say, well, the trend didn't actually turn, right? Because it's hovering around here back and forth. But what I'm looking at on these smaller time frames is not just price going below the 19. I'm looking at these other EMAs. So you see how the 3 rejected here, didn't go below the 19 and went back up. I know the trend didn't turn here because if the trend was going downward, the 3 would have crossed as well. So we had that here, right? And that's why our price kind of went a little lower, but we see the blue line didn't cross, right? So we go in time as we go forward and we see the moment where the trend actually turned is, and I'm gonna get these candles out the way here. We see the moment where price actually turned a negative bearish trend here, because we not only did we get the 3 under, but now we have both 3 and 9 under, and then we got our lowest price action. Same thing applies here. We got the white back above the 19, we got the blue back above the 19, and this confirmed that it went back to the bullish side, at least on this 4-hour chart. So the same rules apply, and it works on any time frame. But it just changes a whole lot of things because you have all these additional trades, and I tell people to stay away from that. Like, stay on the daily, stay on the weekly more than the daily. But yeah, the data, right? Because here on the daily, if we go back to the daily, right, you know, you don't have that noise. You have a clear breakout here, and it came down and actually supported the 19, so you didn't have to go out and continued on. So you literally only had, you know, this trade, and it was easy to identify without the noise. Same with the breakdown. Breakdown here, no noise. You didn't have any indicator to go back in actually till you got here. So you had an in and out. You had an in and out here because this candle got kind of volatile, and then you dumped you back in, and you're easily back on the upside of the trend. So it kind of eliminates the noise. You do see a little bit of it back in this area. But if you're in that kind of situation and you don't want to deal with that, you just go back to the weekly, and then all that noise is gone. So you literally only had 1 trade here, 2 trade there, 3 trades here, 4 and 5. And this is taking you all the way back to, you know, if you want to count the breakdown, it's taking you all the way back to April of 22. So you have 5 trades since April of 22. And that's why I don't like to describe this as trading, because some people, oh, I'm not a trader, I can't sit in there and day trade. Well, you're not day trading with the way that I use this, right? Because you got 5 trades since April of 22. So we're talking about almost a year, and you've only had 5 trades to make.
As long as you have your orders set everywhere.
As long as you have your orders set. So when most people are crying about the, you know, FTX debacle, and they're saying, man, we've been in this bear market and the world's going crazy and all this, right? Your exit was here. And even if this thing would have went down to 10 cents, right, you would have just been increasing your bag size no matter what, you know? And that's why I tell people, like, they have to understand and turn these these negative price action into an opportunity. You know, same thing here. If you got your exit on Bitcoin at 43,000 and all this FTX noise and bull crap was going on, you didn't care, because this whole time you were out with no indication to get back in, and you started getting these low actions at 15,000 to buy back.
Okay, here's a question then. So, like, when, for XRP, for instance, like when the case settles, everyone's anticipating whatever, right? So are you planning, like, what's your strategy? Are you just gonna get to a computer as fast as you can, kind of thing? And
no. So here's what my strategy is, right? Let's say the case ends and it is favorable to Ripple, right? Yeah. Then what we should see, and what we all think we're going to see, right, is price action to the upside. So it should start breaking through these EMAs. It should break it out here at about 55 cents, get into this clear skies area, right? Because there's no more resistances after 55, right? And what'll happen is, as this price starts to get drugged up because of the increased demand and FOMO and all that great stuff, this yellow line is also going to go up, just like it did back over here, for example, right? This was the lawsuit. We hit a bottom. We got back above the 19 and price started going up. Well, we also see the 19s going up. So my trading strategy in the case of what happens after the lawsuit is just to follow this yellow line as it goes up. And if it happens to go up hypothetically $5, $6, $7, right? And then all of a sudden it breaks down past the 19 at $5.50, then I'll be taking my exit, right, to increase my bags. So nothing about my strategy is going to change. It's just that my targets are going to move as this 19 moves. I'm literally dynamic. Like wherever this line goes is where I'm going. So my exits will be set wherever this 19 breaks the wherever price breaks the 19 as it goes up to whatever price it's capable of going with good price action on the case, right? So that may happen at, let's say, $3.50 in this range or something. If it breaks down past the 18 or 19, then I'll be taking my exits, and wherever it goes down, I'll be looking for my next buyback entry. But that was an excellent question.
Yeah, so I just been thinking, like, who knows what's going to happen, and with all that FOMO and everything. Like, I guess, yeah, just watch the 19 and watch. You at that point, you'll be watching the hourly
and well, see, the crazy thing is you just don't want to get caught like everybody else, and then this thing goes up to say $5, and then a lot of people start taking a profit. Next thing you know, you're at 80 cents again, right?
Yeah, exactly.
You want to be prepared for that to happen. Not to mention, like, let's say, for instance, right now we're getting this recent price action, and we get up in this area by March or April, and they lose, right? Yeah. Well, if it happens to break the 19, say at 48 cents, well, at least you have some kind of exit to say, hey, look, they lost. This thing is losing price. I'm out, and you don't end up holding it to zero.
Yeah.
Like at some point, you have to have some kind of management strategy to manage yourself from the risk of going to zero or the risk of missing price action when it goes to the upside. And so this pivot on the 19 is my protection. Anytime price is here, I'm all in. Anytime price is under it, I've got some off the table. And this is just how I protect my assets.
I like it. I think I mentioned that before. That's the best part about the 19 is, like, you're not going to hit the top, but you're not going to lose it all.
Right. And it just removes the emotion from the trading. Like, ultimately, everything else becomes this kind of subjective song and dance. But at least, with this, right, I'm removing the emotions and I'm letting whatever the price is and the environment is tell that story. And I don't have to guess what it is. Like, if it goes great, I'll be getting more price per token. If it goes wrong, I'll be getting more tokens for the price. It's kind of just that simple.
Yeah.
But man, I really appreciate you coming in because I wanted to update people on some of this information. It makes it so much enjoyable when I have someone to talk to rather than talking to an empty screen. So that was wonderful that you jumped in and that you understand it, right? And so that's pleasurable too.
Yeah, no, I appreciate it. And I try to apply it to some of my I have some of my penny stocks. It's not as accurate, I've noticed, but it's because of liquidity, I think, and just the amount of shares being traded that day. It's only a few $1,000 sometimes, so it's not.
Yeah, I have similar problems with new assets, right? So
yeah, you know, no history of the 19.
Exactly, right? Because then I don't have that history to kind of really go by. So like you said, I may have to jump down to the smaller time frames to find the data. And then once I get into the smaller time frames, then I'm fucking with that high volatility again.
Yeah.
So yeah, I know exactly what you're referring to. It does work good for like stuff that has long history. So like I tell people, even with gold, right? If we look at gold here, clear breakout of the 19 could have made a lot of money on the gold long right now. And that was so easily identifiable, right? Like people don't understand how easy this is to identify because they say there's no way that you can, predict this with any accuracy. And I'm like, yes, I can. Like you just have to know what to look for. So that was a clear long on gold. And even if we go back here when gold broke down, right? It broke here. And that was a clear short on gold that took you all the way down to gold lows, right? So it doesn't matter what the asset class is. And I think that's what's so amazing about this methodology that I use, that it doesn't matter what asset. Like this is gold, it's a metal, it's not a crypto. Same thing for foreign currencies. Like I often watch the dollar, right? And this thing pays out in basis points, right? So just imagine how much you could profit if you're shorting gold. I mean, shorting the dollar here, and you went down all the way to these levels. Like that was a great opportunity to make money on DXY because the
Yeah.
trend is clearly identifiable on the break of the 19. And we go back in time and we can see where the trend turned up and verify that this 19 is actually what's identifying it. So there was your break to the upside, and you could have gotten rich on a long on the dollar because it never broke down as it went all the way to these super high numbers of essentially 114.
I
So
don't trade
like,
it yet. I shared it with you, I think, whatever, months ago. That it's a stock called Hive. That
mhm.
yeah, they mine Bitcoin, but basically it follows Bitcoin to a T. Yeah, that's the one. Oh, it's a stock though. I don't. Maybe that'll narrow it down.
I'm trying to see which one it is. Is it this Blockchain Technologies Ltd?
Hive blockchain. Yep, that's the one.
Okay, let's look at it.
Yeah, add that. I plan on trading that one once I get some money.
Yeah, so just taking a quick glance at it, right, we see a clear broke down would have gave me a short opportunity here. It would have took me to its, lows in this area where you'd have got plenty of time to buy. We had a little fake out here for a moment, which was entry and exit basically at the same point, so you didn't lose or win, but you got out and got a second opportunity to increase your bags. And right now it's on the trending on the bullish side, right? It's above the 19 and kind of using it as support. If I zoom in, yeah, it looks like it has an exact tap. Let's get it up here. It breached it a little bit, but yeah, we're using it as support and continuing this upward trend. So a nice entry on that would have been at 290 and let it go wherever it's going to go and have a nice stop at maybe 286.
Yeah. Seems like a good, yeah, well, because it follows Bitcoin, and there might be some advantages because it only trades during the week. So depending on what happens over the weekend and stuff with Bitcoin, there might be, I don't know, trades available there.
Yeah, I'm just going to answer some of these comments here.
Oh, yeah.
If I may ask, did you get a chance to take part in the snapshot?
No, I missed it by like a month.
What, the Flare snapshot?
Yeah, I purchased after.
How do you feel about the project, just from a personal perspective?
Well, because I don't own any, I haven't spent as much time researching it, but I think long term it has. I think all this arguing online and stuff about Flare is a moot point right now. But I think after XRP technically has clarity, I don't see why it would do bad.
Cool. Yeah.
It's good. Well, I think there's just going to be a lot of people that are going to start building on XRP that haven't been, or maybe they're all. I think there's a lot of people on the sidelines waiting for XRP to go up before building, or they have a lot of ideas they want to implement that maybe they don't have the capital, and I don't know.
Yeah, I think they still have two major upgrades before we see the deluge of developers come, because the AMM will be a big one, as well as the EVM side chain. And I think once they get both of those components, I think you're 100% right. We should see a lot of people developing on the ledger with those two new features. So that's what I'll be looking for sure.
And all the grants they've been giving out, there's probably a ton that we don't know about, right? That are just sitting quiet until regulations.
Yeah, I'm a little contrarian when it comes to those grants because I would say, conservatively, maybe 2 out of 10 projects are something that I really think have potential. I don't knock anyone for giving it their best shot, so I give those guys all the credit in the world. Like, you never know what's going to hit, what's not. So I'm not passing judgment. But I think, realistically, maybe 2 of 10 are actually going to be really good projects. So that's still kind of a rolling the dice moment for me with a lot of those grant type projects.
Yeah. And I've seen like some of them are kind of silly too, like, but
yeah, I didn't want to directly say that, but
yeah.
I guess we could agree that they do seem a little silly. It's like trying to force a use case or force an idea. And are you really solving a problem? Because I've always resonated with Brad saying, we're attempting to solve real world problems. And if you do that, then you should see adoption, whatever problem that you potentially solve. Right. And so I think people stretch the definition of solving a problem. So I ask people, like, when you're dealing with people in your everyday life, people who are outside of crypto, like, what problem are you solving for them on a daily basis, on a weekly basis, or on a monthly basis, right? If there's something that they don't do in either of those time frames, then it's probably a stretch to really call it a problem, right? But if they're doing it every day and it's a problem for them every day, then there's an opportunity to solve that problem, and especially if a lot of people have that same problem.
It'll be interesting to see once there is, and who knows, like with interoperability with all these coins and stuff, how much like they're going to allow it to be interoperable. Meaning, like for instance, like if you wanted to use your crypto wallet, or like the same concept is like what China's been using, like their WeChat or whatever. Like I was in China like 10 years ago, and you could go to like a market and scan a QR code and pay with your whatever, their WeChat money or whatever it was. There's the two colors, the green and blue at the time. But it'd be cool like if they actually allowed true interoperability where I could go to China and use my XRP to pay them in their WeChat money or whatever coin they're using, right?
Right.
I don't know.
Right.
Like that's obviously possible, but I don't know if they're gonna allow that.
Yeah, the regulatory environment for it. Yeah.
Like in
That's
theory, you could use
that's why
for everything, right? But
right. That's why clarity is so important at this point, right? Because once we get some type of clarity, like you said, the functionality is already there. You can literally use your XRP for currency whenever you choose, because there's probably going to be some conversion mechanism that bridges it to whatever the receiver wants to receive. So whether it's dollars or whether he wants to receive an NFT for that matter, right? Like there's some conversion process on Ledger that would swap that out for whatever he wants to receive. Yeah. So yeah, that's an interesting future proposition that definitely opens up a lot of possibilities. But yeah, man,
it'll be cool if Elon actually, he's already hinted towards building that on Twitter, but who knows what the grand plan is. But that'd be pretty cool to be able to use Twitter to purchase things daily, whatever in your life.
Yeah, I think that's definitely his ultimate plan, is to build something similar to what you were saying that the Chinese were using, right? So it's this kind of messaging app that has, the payment functionalities built into the app.
Yeah.
All right, man. Well, I'm probably going to go ahead and close it down. It's been about 45 minutes. Let this upload to my YouTube. But man, it was a pleasure. Definitely had a pleasure having you in here. And I got to cover some great information. So I just wanted people to see that it's not all hindsight that this works in. And so I wanted to come in and update it and show them, like, okay, we finally got our final, move to the upside after all this time of being trapped under the 19. And let them be aware, right? Because at the end of the day, your chips are going to be on the table more than likely anyway. But as if this is a move, and we start trending, the next important thing I want them to do is be able to find their exit. So I'll be screaming about, watching this potential exit point as we get upward. And that's going to be the moment where some people are going to really define, how they perform in this market. Either they're going to ride it down and keep waiting, or they're going to be able to take advantage of the downside as well as the upside. And so I'll be sharing that data as we move into the future as well.
I look forward to it.
All right, man. You have a great day. Stay safe and stay profitable.
You too. See ya.
All right.